All right, normally we take a look decades back in history, but today it's fitting to go back to what happened 1 year ago today, March 12th, 2023. It was a Sunday evening when New York State regulators stunned investors by announcing they had shuttered Signature Bank. Now, that announcement came just days after the demise of Silvergate Capital and SVB Financial, three U.S. banking failures in barely a week, and all three would rank among the four largest banking failures in modern U.S. history. And that's the backdrop for my question of the day. $500 billion in assets were affected from just those three banks in just 1 week. To put that into perspective, during the decade-long Great Depression, at least 9,000 banks failed, taking with them a combined $7 billion in depositor assets, or when you adjust for inflation, roughly about $130 billion today. What was even more dramatic about Signature shuttering and subsequent liquidation was that torrent of deposit outflows. Remember, on the previous Friday, March 10th, 2023, that torrent had actually stabilized by Sunday. That made the decision to close the bank that day a shock to the company's managers, who had really only found out about it just moments before the public announcement. Former Congressman Barney Frank, who is a Signature board member, was incredulous.
We began to get these deposit outflows on Friday, began dealing with them. I believe by Sunday we had resolved that, finding more capital, and the deposit outflows stopped.
Now, to be fair, much like Silicon Valley Bank, Signature's clients were made up almost entirely of businesses and had a deposit base almost entirely uninsured. While most of the depositors in 2023 were made whole, the episode did rattle the nerves of investors. That steady trickle of dollars out of banks and into money market funds, that started in 2022 as the Fed raised rates, but it turned into a flash flood in 2023 with those bank collapses. Growth in money market fund assets, which had flatlined in the 2010s at around $2.6 trillion, had begun to swell in the early months of the 2020 pandemic, and in 2023 soared by more than $1 trillion for the most for any year on record. Now, conversely, deposits at U.S. banks dropped from about $17.7 trillion at the start of the year to $17.2 trillion by May. That included a 2% decline in March 2023, which was the biggest monthly outflow since the Black Monday crash in October 1981. Now today, bank deposits, they still not returned to those pre-crisis levels, and money market funds still sit on a record $6 trillion in cash, more than double the levels of just about 6 years ago.